Hello everyone, welcome back to the channel. In the previous video, we talked about what an audit universe is, what a risk universe is, and the difference between them. Today, we will move to the practical side. How do you actually build an audit universe from scratch? This is a very important skill for internal auditors, audit managers, risk professionals, and even small audit teams building a risk-based audit function. Because many organizations either do not have a proper audit universe or have one that is outdated and incomplete. And honestly, a weak audit universe creates weak audit planning. If you don't fully understand the organization, you cannot properly prioritize audits. So in today's video, I will explain step by step how internal auditors build an audit universe from the beginning. Let's start. Step 1. Understanding the organization. This is always the first step. Before building anything, you must understand the business. This sounds simple, I know, but many auditors skip this stage. Sometimes auditors immediately open Excel files and start creating lists. This is a mistake, because the audit universe should reflect reality, not theory. So, first, understand how the company actually operates. Review organizational charts, company structure, annual reports, strategic plans, process documents, system architecture, and management reports, of course. Try to understand how the company makes money, where operations happen, which systems are critical, and which activities are most important. This stage is extremely important. Meet the business teams. Documents alone are not enough. You must also talk to people. Meet finance teams, procurement teams, operations, IT, HR, manufacturing, logistics, compliance, and sales teams. Ask simple questions to them. What are your main responsibilities? Which systems do they use? Which activities are most critical? Which areas create operational pressure? Which processes frequently change? And which activities depend heavily on third parties? These discussions help auditors understand the real organization. Because sometimes the actual operations are very different from official documentation. Let's come to step 2, identifying auditable entities. Now we move to the core stage. Identifying auditable entities means identifying everything that can potentially be audited. Think broadly. Do not only focus on departments. Modern audit universe creation includes processes, systems, projects, legal entities, geographic regions if you have many, and third parties, of course. For example, processes. Let's say procure to pay or order to cash, payroll alone as a process, inventory management, financial reporting. These are the processes, main processes in every company. Departments, finance, HR, procurement, IT, logistics. These are the main departments in every company. Systems, SAP, Oracle, cybersecurity systems, cloud platforms. If you use Power BI reporting systems, these are the main systems in many companies used. Locations, stores, if you have retail stores, factories, warehouses, country offices. Let's come to projects, ERP implementation, digital transformation, AI implementation projects. Third parties, outsource IT or HR, They do this in many companies. Logistics vendors, external warehouses, service providers. Everything that internal audit may review becomes part of the audit universe. Now let's come to step 3. The audit universe must become structured. Otherwise, it becomes confusing very quickly, especially in large organizations. So auditors usually categorize audit entities. For example, financial processes, treasury, accounts payable, accounts receivable, financial reporting. These are financial processes. Let's come to operational processes, manufacturing, retail operations, logistics, supply chain. These are operational processes. Let's come to IT processes, cybersecurity, user access management, change management, backup management. These are the core functions of IT processes. Let's come to compliance areas, GDPR, ethics, anti-bribery, health and safety. These are the compliance areas in many companies. Strategic activities, expansion projects, for example, or digital transformation. Geographic regions, for example, local operations, international operations. This structure creates clarity, and it helps internal audit manage complexity. Now let's come to step 4. This is another important decision. How detailed should the audit universe be? Some companies make it too simple. Some companies make it too complicated. Both are problems. For example, if you only write finance, that may be too broad. But if you divide finance into 150 micro activities, the universe becomes impossible to manage. So balance is important. The audit universe should be detailed enough to identify risks, but practical enough to manage. This balance comes with experience, of course. Now, let's come to step 5, linking ownership. New auditors usually assign ownership. This means who is responsible for each audit entity. For example, treasury. The responsible person should be finance director. Cybersecurity. IT security manager should be responsible. Retail operations, retail director, of course. This becomes very useful later during risk assessment, audit planning, and audit communication, because internal audit always needs business ownership. Now, let's come to step 6. Understanding supporting systems. This step is often ignored. But modern organizations are highly dependent on systems. So auditors must identify which systems support which processes. Let me give you an example. SAP supports procurement. Payroll systems supports HR. WMS supports warehouse operations. POS systems support retail operations. Why is this important? Because sometimes the risk is not in the process itself. Sometimes the risk is inside the technology. For example, weak user access controls, poor integrations, incorrect system configurations, or weak change management. Modern audit universe creation must include systems. Now, let's come to step 7. Include third parties. This is another area many organizations forget. Today, many critical operations are outsourced. Let me give you another example. For example, cloud hosting is outsourced. Software development is outsourced. Logistics, sometimes it's outsourced. Call centers, payroll processing, cybersecurity monitoring, all of them or some of them can be outsourced. If a third party supports critical operations, it should appear inside the audit universe, because operational dependency creates risk. Modern internal audit must think beyond company walls. Now let's come to step 8. Validate the audit universe. Now, the draft audit universe should be reviewed with management. This is very important. Why? Because internal audit may miss things. Management validation helps identify missing entities, operational changes, new projects, and hidden dependencies. Sometimes management says this process no longer exists. Don't bother to think about it. Sometimes they can say this system was replaced with another one. Sometimes they can say this operation moved to another country, or this vendor now handles some other activity. Validation improves quality, and it also creates management engagement. You interact with them. Now let's come to step 9. Keep it dynamic. One of the biggest mistakes organizations make is this. They build the audit universe once and never update it again. But organizations constantly change. New technologies, new systems, new stores, new vendors, and new business models appear. For example, 5 years ago, companies didn't heavily use AI tools, cloud environments, or digital platforms. Today, these are critical. So the audit universe must continuously evolve. Otherwise, internal audit becomes disconnected from reality. Now, let's come to common mistakes in building audit universe. Mistake number 1, only focusing on departments. Modern organizations are process-driven and technology-driven. Departments alone are not enough. Mistake number 2, ignoring systems. Today, IT touches almost every business process. Mistake number 3, creating too much complexity. A very large audit universe becomes difficult to maintain. Mistake number 4, ignoring third-party dependencies. Outsourcing creates operational risk. Mistake number 5, using copy-paste templates. Every company is different. A manufacturing company, a retail company, or a bank will not have the same audit universe. Customization is critical. So let's summarize today's discussion. Building an audit universe from scratch requires, first of all, understanding the business, identifying auditable entities, organizing them properly, linking systems to ownership, including third parties, and continuously updating the structure. Remember this, a strong audit universe creates stronger risk assessment, stronger audit planning, and stronger internal audit coverage. Because internal audit cannot protect what it doesn't fully understand. Thank you very much for watching. If you enjoyed this video, please like and subscribe, and share the channel with other auditors and risk professionals. Thank you very much.